Hello, people. Good day, everybody, wherever you are listening to me. If you came here expecting to know how I made $2,444 in 3 days, then you will not be disappointed. Just stick with me till the end of the video and I will show you how I did it and my thought process behind my trades. I want you to know that we are in this together. My goal is to help you make money in the stock market as I also make money. So we are in this journey together as I also have a skin in the game. But before I proceed with the content of the day, I'd like to wish you a Merry Christmas. Jesus Christ is the reason for the season and he loves you very much. That is exactly why he died for your sins and for my sins. If you receive him into your life as your personal Lord and Savior, he will deliver you from sin and death. So once again, Merry Christmas. So I have a three cost plan for today, for this video. First of all, I'm going to review the before and after. Then we are going to analyze my trades, and then we are going to go into what's next. We're going to go into what's next, okay? So if you take a look at this chart, this is the kind of thing I had the previous time I released a video, the first time I released a video. I have a question for you because we are in this together, remember? I want you to understand why you should enter a trade and when to exit a trade, those kind of things. You need to have that kind of understanding. It's not just when somebody tells you, oh, the market is going down, it's going to crash. You dump all your money in without understanding why the market is going to crash. Technically, is the market going to crash or not? Or the market is going up. Why should the market go up? Technically, do you understand why you think the market is going up? If the market is going up, when is it going up? Because somebody could tell you the market is going up or the market is going to crash, and it will take 6 months before that happens. So, for example, if somebody said the market is going to crash and it takes 6 months, or immediately the person says so, you go and dump your money and go short the market, and it takes 6 months for the market to crash. Meanwhile, for those 6 months, the market is going up. The market could go, for example, SPS could go up 1,000 points or 1,500 points. So by the time the market crashes, it may not even crash down to the point that you entered your short trade. Okay, assuming you shorted on stocks and you didn't buy puts, because if you bought puts, that's even worse. I mean put options. Okay, because time eats up your options. So you need to be very careful. That's why you have to have a good understanding technically of the market. All right. So I have a question for you. This is where we were last time I released the video. I want to ask you a question. I had 4 options: this, 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 this. And if you didn't watch that video, I'm going to put a link to it towards the end of this video at the top right corner. So please click on it and be sure to watch it. Okay. I want to ask you a question. Out of these 4 options, which ones have been eliminated thus far? And I'm going to give you some time to think about it. You know what I'm going to do? Let me click on this. Hold on. Okay. All right. So, I think it should be pretty evident by now that this option, which I told you, remember that this option, the probability of this option was very low, if you remember. I could have just given it a 0 probability, but I just had to assign it some probability because this is the market. But at this point, it becomes a little bit more difficult to make a decision. So I'll ask you again, which other option has been eliminated out of the remaining 3 options? Because what we have left are this one, and this one. Okay? And please understand that things have kind of changed. I'm going to bring up a new Elliott wave for where I think the market is going, because I have new data. We now have new data from here up to here. The market has moved more than 100 points. That's a lot for SPX. Okay? So assuming you went short here because somebody said the market is dumping, I mean, that's a big loss. That's if you haven't exited your short. So just don't go short because somebody said the market is dumping or the market is going to crash. Okay? You need to be very careful. Just follow me, and hopefully I can, with more videos and with more teaching, hopefully you start getting to understand some of these things. So yeah, this one has been eliminated. This option has been eliminated. The next option that has been eliminated is this option. Okay, so we are going to delete it. I said for this, if wave one hadn't completed, it was still going to go a little bit up, come down, and then continue moving up. This was supposed to be wave four of this wave one, and then we're supposed to have a 5, and then it will come down. That's what I said for a wave 2, for a bracketed wave 2, and then it will move up. But that's not what it did. We were down, it continued going up. So pretty much this has been eliminated, even though it's similar to this, but it's been eliminated. So I'm going to delete it. All right. So that leaves us with 2 options. These are 2 very viable options. And at this juncture, I'm going to bring up a new Elliott wave for this because I have replaced this. Why? Because we have new data, and I have looked at the lower fractals and I've come up with another projection for where I think the market is going to go to. All right. So at this juncture, I will bring that particular Elliott wave so that we can take a look at it. Okay, so we are now at the point where we kind of look at what next. And as I promised, I have replaced that particular Elliott wave with the new one based on new data, and that is this white Elliott wave. Okay, now I have 3 options going forward: the brown option, the white option, and the green option. Okay, and I'm going to explain the reason why I think any of them is a possibility. There are probabilities here. Again, the market trading is a probabilities game. But before I go into that, I want you to, take a look at this chart and kind of tell me what you see, or, just note what you see. Not that you can talk to me, but what are the things that you can see? The first thing is you can see these 3 strong green bars or candles. This is what you call the 3 white soldiers. Okay, the 3 white soldiers. It's a very bullish pattern. Kind of shows that the market is turning and moving up. There is somewhere else this happened. In the market. You can see something like this. Boom, boom, boom. Very powerful. Okay, then look at what happened. If you have big green candles or clear green candles, that's much better. Something like this. So that's something you need to take note of. The second thing you need to take note of is the volume. Volume is decreasing here. That's another thing. It's like a contrast. Okay. However, the thing about this volume is that it's taking place, you're having low volume on a Christmas period. Okay, so volume is generally light. Okay, so I don't give a whole lot of weight. I don't attach a whole lot of weight to this low volume. If it's on a normal trading day and you have the volume going down like this and the price is going up, you need to be very careful, because that is what you call a price volume divergence, negative divergence. Okay, price is going up, volume is going down. You need to be very careful. But if you ask me, I think the market is going to go up. So another thing I want you to take note of is this thing you have here. It's called a fixed range volume profile, and you can get it from this tool section. Look at it here. You click and you come here, fixed range volume profile. Okay, it's the volume profile within a particular range that you determine. Now, the range that I chose is from this place, from the low here to the top, okay? And these are the points of interest. I use it to get levels, levels of interest. There are other ways to get levels of interest, but this is one of them for me. Now, you can see at this point is a major level of interest. If, for example, the market is coming down, you need to, if you're in a short trade from this point to this point, you need to exit by the time you get to this point until we clear this. You don't want to keep short till that's the problem with many people. They are thinking, oh, crash, 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 crash. And they stay short and the market, boom, reverses and goes up. The market doesn't care about you. It doesn't care about your emotion or what you think. No matter how much the market can keep going up or remain irrational for another year or two before it crashes. That's the thing about this market. So you need to be very, very careful. So this is another area of interest. Guess what? If you drew this before this point, you would have known, you would have exited your shorts here. So I saw this, and this was one of the reasons I had strong confidence that the market was going to reverse. In addition to the technical analysis and other data points that I have, the technical analysis, the strong green candle, which is bullish engulfing, this high volume, that's a lot of data points, okay? That's what you need to make an informed decision. Okay, you say, because of this, the probabilities of the market going high, going up, or reversing is high. And you put your trade, and then you set your stop loss, okay? If you lose, at least you're comfortable with the fact that you made a very sound decision, not a careless decision. So the next level is this level. The market has cleared it very, very easily. Okay, and then we are approaching this point. This is an area of consolidation at the top of the market. So you want to be very careful here. If you ask me, no need to go long at this point. Just sit it out. Except if you're a day trader, you know what you're doing, or a scalper. I mean, this is about, this market is 6,040. The high here is 6099. So pretty much 60 points, okay? 60 points. That's something. If you're a scalper, you can make quite a lot of money with 60 points. But if you don't know what you're doing, I advise that you stay out and let the market go to an all-time high. Again, I think this is my option of choice. The white option is my A option, okay? It's my number one scenario. I don't think the market is going to come here and crap. No, it will come here, I'm thinking, pull back a little bit, and then make a higher high. So, but when the market makes a higher high, you need to be very careful. And I'm going to review, maybe in another video, why I think, we're in a very precarious point in the market. This is not the point you want to, start going long, because there are a lot of divergence in both on the daily, on the weekly, and on the monthly. Okay, you don't want to be playing around here with longs, except you know what you're doing. You just go in and out, in and out. You don't want to be investing or playing long games at this point. No, you go in, come out, go in, come out. Then when the market is crashing, or it gives you a confirmation, you now go short. All right. Another option is for the market to just keep on going up. That's also a possibility. Remember, trading is a probabilities game. Okay, so we have come to that portion that I promised you, where I was going to show you my trades and how I made $2,444 in 3 days. So if you had listened to my video, I knew this area was an area where the market was likely going to bounce. And I had several confluences that made me have such high confidence. One was the volume, if you remember. Second was the support area. And of course, later on, we had a very strong green bar. And then Elliott wave analysis, as well as some other data points that I have. So I went long here, exited here, which was sort of an area of consolidation. When we cleared this area, I went long here again and exited exited somewhere here. So all these are sort of estimates. These points are estimates because I really don't have the timestamp, probably because of the kind of account I have with Fidelity. It doesn't sort of, the timestamps come up and then they disappear. I've actually put in a request for them to correct that. Hopefully they will correct that. So that was it for me on the 20th. And then on the 23rd, if you remember my first video, if you haven't watched it, please go watch it. I said that I believed that the market was not going to continue to go down. We're going to move up. That was, I had high confidence for that. And when the market opened on the 23rd, which was, I think that was Monday, and I kind of waited for the market to move and have a pullback. Once it had a pullback, which was supposed to be wave one of three. Okay, if you looked at my Elliott wave, this was supposed to be wave one of three. This being wave one, wave two. We're now moving to wave three. So this is wave one of wave three. Okay, so wave one, wave two, and then wave three of three. So once we got on to 3 of 3, I got in here and exited here. That was actually on the 24th, so that was the third day. Okay, and 24th was a half day, if you remember. So later on, I got in here and quickly exited here. And that was it for me for all my trades. That was all of them in profit. I also put in trades on options, some calls, and I had all profits as well. I had made profits pretty much, total trades. So, but I'm not going to talk about those here. So all these trades were all profits, and I'm going to now show you the orders, so that you know that because anybody can draw these things and tell you that they entered in and came out without showing you their orders. So I'm going to show you the orders next. These are the orders, my orders, all the trades that I showed you, all the arrows I drew on the chart are sort of best estimates of when I put in the trades. So this is my buys and sells. If you want proof, you can add up all the greens and subtract all the blacks. Pretty much that's it. You add up all the greens and subtract all the blacks, and you're going to see it comes out to about 2,444. These my shares that I bought and at what price I bought them, and this is what the profit comes out to. Profit 2,444.95. Okay, so that's it for the video for today. Please be very careful. As I said, if you're going long, be very, very careful. The market is in a precarious area. In my own estimations, this is not the time to be going long and investing. You just go in, go out, go in, go out, go in, go out. All right, have a wonderful week, people. I'll see you next time.